Hey everyone, welcome back to today's video. Today, we're going to check out this very interesting video, and hopefully, you'll learn something new along the way. Let's dive right in. Don't forget to leave a like, subscribe, and share your thoughts in the comments. And now, without further ado, let's get into it.
If money is evil, then that building is hell.
The stock market crash has come, and the Great Depression has begun.
The stock market goes, so goes the wealth and the health of the American economy.
The stock market has gained almost $3 trillion in value since the election.
Trading changed my life.
Day trading is a scam.
I have been trading for over a decade now.
I was able to make multiple $1 million. Now I've retired my family.
And the really rich guys, they don't make their money from crypto.
Ah, shit. How the fuck did we get here? Trading. It's one of the world's oldest professions, right up there with farming, blacksmithing, and, well, let's just say another profession that's been around since the dawn of time. But here's the thing. Trading isn't really just about numbers on a screen. It's power, it's influence, and its history in motion. But before we had billion-dollar hedge funds, Wall Street suits, or crypto bros with laser eyes on Twitter, trading was as simple as swapping a bag of wheat for a couple goats. And this was just value for value. Before banks, before money as we know it today. So fast forward a few centuries and trading is now the battleground for wealth, corruption, and opportunity. From big banks controlling the markets to hedge funds now running billion-dollar plays. And now we've got TikTok traders showing off their P&Ls on a daily basis as well. But how did we get here? Trading wasn't born in Wall Street or even in a shady Forex Telegram group. It started with bartering. People trading cows for grains and gold for spices. No leverage, no indicators, just raw deal making. And then came the first official markets. This is ancient Rome, the Silk Road, and early merchant ships as well. This was trading in its purest form. Supply, demand, and please don't rob me while I travel across the ocean. Then came the Dutch, bringing with them a revolutionary concept, the first real stock market. And it was the early 1600s. The world was expanding through trade. The Dutch were dominating global commerce with their massive shipping networks. But funding these voyages were risky. Enter the Dutch East India Company. This was one of the world's first multinational corporations. Instead of relying on the government or a few wealthy backers, they had something totally new. They sold shares of their company to the public. This meant that everyday people, not just merchants or aristocrats, could own a piece of the trading empire, all without stepping foot on any of their ships. So what exactly is a stock market then? At its core, it's a system that allows people to buy and sell ownership stakes or stocks in companies. The Dutch created the first centralized stock exchange in Amsterdam, where traders could buy and sell their shares. But of course, investing comes with risk. If the company failed, shareholders lost their money. A lesson that some early investors learned the hard way. This new system was a game changer because it allowed companies to take on ambitious projects without putting all the financial burden on a single entity. It also introduced speculation as people started buying shares, not just on ownership, but in the hopes that the value would increase. This shift from trading goods to trading the idea of future success was the birth of modern investing. And then came Wall Street. In 1792, a bunch of wealthy traders signed the Buttonwood Agreement, creating what would then become the New York Stock Exchange, or the NYSE. From here on out, it was stocks, bonds, financial instruments on a massive scale. The 20th century saw the rise of big banks, investment firms, and institutional investors. The guys in suits, the ones that made the rules, they controlled everything from stock prices to entire economies. JP Morgan, Goldman Sachs, Lehman Brothers, these weren't just companies, they were empires. And that, with great power, comes great stupidity. In 1929, everything crashed. The stock market completely collapses. Everyone and their mother goes completely broke overnight. Now let's fast forward to the 2000s, when the housing market in the US was booming. Buying a house seemed like the safest thing ever. Prices kept rising and banks were giving out home loans to almost anyone, even people who had no stable income or no savings. These risky loans were called subprime mortgages, basically just meaning really bad quality loans. Now, big banks packaged these risky loans into investments and sold them to other banks, investors, and even retirement funds. But there was one huge problem. People couldn't actually afford these homes. And when they started defaulting on their loans, failing to pay them back basically, the entire system collapsed like a house of cards. One of the biggest investment banks at the time, the Lehman Brothers, had made a huge bet on these risky mortgages. And when the housing market collapsed, they lost everything and went bankrupt in 2008. This was one of the biggest financial collapses in history. The economy went into a deep recession and millions of people lost their jobs and homes. So who got hurt and who got saved? Here's the crazy part. Regular people lost everything, but the big banks got bailed out. The US government stepped in and used taxpayer money to rescue these banks because they were considered too big to fail. This then angered the public because it felt like Wall Street caused the crash but didn't actually face the consequences. Ordinary people did. People were furious. Protests broke out across the US, especially in New York, all under a movement called Occupy Wall Street. Protesters believed that the financial system was rigged in favor of the rich, and they wanted a stricter regulation to stop big banks from taking such dangerous risks again. This movement changed how people saw trading and investing. It also played a huge role in why retail traders, regular people, started looking for ways to take back control, leading to the rise of online trading platforms and retail investor movement that we see today. Ah yes, the birth of "I'm also a trader now" phase. Now, in ancient times, trading was entirely physical. You had to be at a marketplace dealing directly with other people. If you wanted to trade gold, silk, or spices, you'd have to actually physically travel to another city or country. Only rich merchants had access to long distance trade. And this was because they could obviously afford ships, caravans, and storage as well. Even as stock markets developed, trading was reserved for the elite. If you weren't a rich banker, a business owner, or a stockbroker working on Wall Street, you had no chance of participating in the stock market. But today, anyone with an internet connection can actually trade. So let's break down how that happened. Before the 2000s, if you wanted to trade stocks, you needed a stockbroker to place trades for you, a special trading license, and a lot of money. And this changed when online trading platforms like Thinkorswim and MetaTrader 4 allowed people to trade from their computers. But in my opinion, the real revolution came when Robinhood launched in 2013. You see, Robinhood did something that no one else had done before. It introduced commission-free trading. Before that, every time you bought or sold a stock, you'd have to pay a fee. But Robinhood made it so that anyone, even with just $50, could buy stocks for free on their phone. This honestly changed everything. Millions of people who had never traded before jumped into the stock market. And other apps like eToro and Webull followed, making it even easier to trade. Now, for the very first time in history, an average person could open a stock trading account in minutes start trading with as little as $10. They can also use leverage, which is like borrowed money, so that you can make bigger trades. And you could even trade from anywhere in the world, even from like a coffee shop. And then, my friends, came the rise of prop firms. Now, in the old days, if you wanted to trade big amounts of money, you needed to have a lot of capital. But not everyone has the funds to trade stocks, forex, or commodities. And that's where prop firms came in. A prop firm is essentially a company that gives traders access to large amounts of money so that they can trade without using any of their own. The idea was simple. If you're a good trader, the prop firm lets you trade their money. And if you make profits, you get to keep a percentage, and that's usually between 70 to 90%, and the firm takes the rest. And if you lose and blow up the whole account, you don't even owe them any money, you just lose access to the funds. Now, early prop firms were on Wall Street, where only elite traders could get access to these kinds of funds to trade. But as the internet grew, prop firms started going online, which meant that suddenly an average person just sitting at home could apply to trade with prop firm capital. Now, don't get me wrong, trading isn't just about making money, it's content. In the 2000s, if you wanted to learn trading, you had to read boring books, pay for expensive courses, work at a financial firm. But now, with the help of content, you can just go on YouTube, TikTok, or even Twitter and watch traders breaking down things like chart analysis, trading strategies, how much money they made or lost. And some of the biggest trading influencers became readily available in just a few button clicks, who started teaching their own concepts. People started trading while streaming on Twitch, and then there were trading discords with thousands of members. Platforms like Twitter and Telegram became free trading communities. So trading went from a physical marketplace in ancient times, a financial system controlled by banks, a game for hedge funds, and turned into something that literally anyone with internet access can now do. The barriers to entry in trading has become lower than ever. Anyone with a phone, Wi-Fi, and a bit of knowledge has been able to get started. But of course, this access comes with risks. So there's now more scams and fake gurus than ever before. Social media hype had made trading look easier than it ever really was. And then of course, we have the fake guru epidemic. Social media had created a new breed of influencers, trading experts who flashed rented Lamborghinis, posted screenshot flexes, and promised followers they could turn $100 into $1 million in a couple of months. So while some traders genuinely share valuable insights, many faked their success to sell expensive courses, Discord memberships, and signals. Now, let me be clear, there's nothing wrong with teaching what you do. I myself obviously teach thousands of traders inside my free and paid community, and I help them get better results. The problem occurs when you don't trade yourself, and this is what happened in 2021. And this was one of the biggest social media trading scams ever. The story of Jake Trades. Jake was just a regular guy, but in 2021 he saw the rise of trading influencers and realized there was a lot of money to be made, and not in trading, but in selling the dream of trading. He started posting crazy gains, turning small accounts into huge profits. He bought fake funded accounts to show off his 100K plus balances. He rented luxury cars and then stayed in Airbnbs and sold the "I made it" lifestyle. People trusted him and thousands joined his paid group. But what they didn't know was Jake wasn't trading with any real money. He was just using demo accounts, and his strategies were vague and never actually worked. And as a result, his students lost thousands while he profited off their memberships. The scam went unnoticed for a while until one of the biggest clients exposed him. So it was a trader named Ryan who had paid $2,000 for a mentorship and started asking questions. He noticed that Jake's trading account screenshots didn't match real market data at all. And then a leaked DM surfaced. Jake told his friend, "I don't even trade, bro, nor do I even know how this thing properly works. I just sell the dream." The news then spread like wildfire across Twitter, Reddit, and Discord. Jake Trades is a fraud. His accounts were then mass reported and banned, and his students demanded refunds. And then of course, he vanished from the internet, deleting all of his videos, and he was never seen again. At the end of the day, trading has evolved more in the last 20 years than in the previous 500 years combined. And with AI automation and new tech, the way people traded has kept evolving. And that brings us to over leveraging and blowing accounts. Now, social media also made high-risk trading look totally normal. And one of the biggest traps traders fell into was over-leveraging, which is borrowing huge amounts of money to place bigger trades and hoping for massive profits. And many influencers glorified this by posting these huge profit screenshots and not mentioning how dangerous those profits were to attain. If there's one wrong move, your whole account is blown. If the market literally moves 1% against you, you're completely liquidated. And retail traders were chasing unrealistic returns, and it was completely game over. A viral case was the 50 to 50k challenge craze. Some influencers faked results by editing numbers or showing only their wins while hiding the losses. But real traders tried it and lost everything. And by the time they realized the game was rigged, they had blown their entire savings. The big lesson? Trading isn't what social media shows. So here's the part they don't tell you on Instagram. Real traders lose sometimes. They don't wake up every day, roll out of bed, and then print money 9 to 5. And if they say they do, they're lying. And the real winners, they're not out here trying to flip $100 into $10,000 overnight. They're focused on long-term consistency, risk management, and playing the game like a business, not a lottery. I've had traders come into my mentorship completely stuck, blowing accounts, hopping from one holy grail strategy to the next, thinking the market was rigged against them. And fast forward a few months, they're now stacking 20k plus payouts month after month. And one of my students, he failed 5 challenges before joining, and this guy was about to quit trading. And 6 weeks later, he was funded multiple 6-figure accounts and pulling real verified profits. Trading isn't just about knowing the strategy. It's about execution, discipline, and mindset. And here's the biggest difference between those who make it and those who don't. Now in 2025, artificial intelligence and automation had taken over a significant part of the trading world. And while professional traders had been using algorithmic trading for a long time, AI-powered retail trading bots became more accessible, making trading less about intuition and more about data-driven decisions. AI models could now analyze millions of data points in real time, and bots could execute trades faster than any human could. AI-driven risk management also prevented traders from making emotional mistakes. And this meant that manual trading became harder. Retail traders had to either compete with machines or they had to use AI to their advantage. Those who adapted stayed in the game, while those who relied on gut feelings and outdated strategies really struggled. Trading stopped feeling like a solo activity by 2025, and it had turned into a community-driven experience, with things like social trading platforms allowing people to copy trades from top traders. Trading competitions were hosted on Twitch and YouTube, which then brought an entertainment into finance. And trading apps introduced leaderboards, streaks, interactive charts, and that made trading feel more like a strategy game. People no longer traded alone in silence, and they engaged in live streams, Twitter Spaces, and Discord servers to then discuss trades in real time. So where is it going next? Well, AI-powered trading is here to stay, and manual trading is evolving into data-driven decision-making. Trading education and entertainment are now deeply connected, and traders are now becoming content creators, influencers, and educators all at once. And social trading and gamification makes trading much more interactive and competitive than ever before. And traditional finance is losing control. Traders have much more independence through things like crypto, DeFi, and tokenized assets. But one thing remains certain: trading isn't dying, it is just evolving. All right, let's talk about what just happened. We just went through the entire history of trading and we saw how it started with banks, Wall Street, giant hedge funds, and retail traders. And now trading isn't just trading anymore. It's merged with creator economy, it's on social media, it's on your feed, and suddenly everyone's a trader. But most people, they're still broke and they're hopping from one new strategy to the next, blowing account after account, getting baited by gurus who couldn't trade their way out of a demo account. And I already know some of you are feeling that right now. You've tried everything. You've followed the free strategies. You've watched the breakdowns and maybe even passed a challenge or two. But the payouts, they never last, and you're inconsistent. And deep down, you know you're missing something. And that's why I created the Predator Blueprint. This is a one-on-one mentorship where we literally personally take you by the hand, guide you to profitability and getting funded within 60 days. We've literally had people like Mickey making over $90,000 within 3 months. And we've had people like Jared make over $30,000 within a 3-month period as well. All because we showed them our proven strategy that we've been trading live on stream for over a year with video recorded proofs of each execution of each trade, making it totally impossible to fake. And after we guided them through this, coaching them through every single hurdle that every trader inevitably will have to jump over, they managed to completely change the trajectory of their trading journey. And here's the truth, I don't need more students. My mentorship isn't some everybody's welcome Discord server where you pay a fee and you get access to some recycled PDFs. This is real high-level training. And I've got students who went from barely break even to stacking consistent 20K payouts. And now they withdraw every single month like clockwork. I've even had students that got funded with multiple 6-figure accounts in under 2 months. And here's what separates them from you. They followed the damn process. They stopped strategy hopping, they fixed their trading psychology, and they learned the game properly, and they committed. And that's why I built this mentorship, to turn struggling traders who are getting taken advantage of by prop firms, by fake gurus, and turn them into absolute killers. So yeah, if you're serious, if you actually want to learn how to trade like a proper trader and stop making the same mistakes and finally start withdrawing instead of just depositing and paying prop firm fees, then apply below. But let me be clear, I don't take everyone. If you're just looking for another secret hack, this ain't it. If you think trading is easy and you're not willing to put in the work, don't waste my time. But if you're actually ready to do what it takes, and if you want real mentorship, real step-by-step guidance, and to achieve guaranteed funding in 60 days, then apply. And if you get in and you're accepted, I'm gonna make sure that you never trade the same way ever again.